Hi, this is Brian Shepard from the floor of the CME Group. With all the events, the world events going on, it's very, very difficult to see a clear picture for the near term. There's an old saying down here and throughout Wall Street, climbing the wall of worry. The challenges ahead for both in Japan and the Middle East, they're creating, vicious turns in the market. The volatility is back. We've been coming up here as MrTopStep Group, individually talking about our thoughts and sharing those with you. But collectively, I think our message has been, one of, playing it close to the vest and managing your risk a little tighter. From bracket to bracket, from morning session to afternoon session, there's turns in the market. Right now we're looking in the S&Ps, at a range of 1306 area down to those overnight Globex lows last week, 1278. At this point, it does seem that the selling the rallies mentality is back, but they've been met with the buyers. The buyers have not really gone away. The locals in the pit have been willing to take the long side on numerous occasions throughout the last couple of weeks. Intact, let's say, on the 1306, but it would take a lot, I believe, to get through that at this point. Currently our range is just 5 handles in the June S&P at 1290 to 1295 area. Top-notch shared a pivot point, his daily pivot at 1296 and some change, 1296.5. We can look at that with stops above recent 1298 area up to 1302. One would think that would be a good level in there with placing trailing stops. On the downside, short term we look at 1287 down to 1283. At this point, the inflation concerns that are out there, commodity inflations, and the knee-jerk reaction of that, what it's going to do not only to the consumer, but also the knee-jerk reaction to what Ben Bernanke and the FOMC is going to do. With all this overhang and clouds over the market, again, keep your trades, play small ball, and use stops.